Hello everyone and welcome to this presentation of the two main edges you need for a winning trade. Welcome, my name is Primo. I'm the president and founder of Specialist Trading, and for those of you unfamiliar with our website, we are first and foremost an educational company. We are all about teaching you the tips and techniques I've accumulated in my 38 years so that you can ultimately empower your own trading and not have to rely on an outside source telling you what to do, how to trade, what's the perfect time frame. Hopefully you'll be able to make those decisions for yourself. It's our belief that that's the only way you'll become a consistent trader, by relying on your own decisions rather than some indicator, someone in a chat room, someone in a trading room, or even someone in a webinar that you're listening to. Now, I've been trading for 38 years. As I stated, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. If you're not familiar with what specialists was, they were those gentlemen that created the markets, or they made the actual prices. They set the prices in roughly anywhere from 35 to 50 stocks. I did that for 9 years, roughly for about 50 stocks. I traded through the crash of 1987 and the bull market that followed after that. And I've traded in just about every market environment, every condition you can think of, from straight up to straight down markets, sideways markets, rangy, volatile. And I've traded just about every technique or system you may think of as well. So I know what works in terms of consistency, and I know what doesn't. And most of the time, the reason why I believe the majority of traders fail is because you're relying on outside sources to tell you what to do and how to trade, and also you're overcomplicating your trading. So I'm going to show you two really simple but powerful techniques today that you can actually add onto any trading methodology that you're currently using, or if you'd like, you can actually build a strategy based off of these, and you'll be able to, in my opinion, increase your odds for success and have more consistency in your winning trades. Now, I'm going to show you this in just a few minutes, but before we begin, we're required to show you our disclaimer, so please take a moment to view it. I'm going to show you a lot of performance results using these two edges, and then I'm going to actually show you some more edges on how to increase your odds for success. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we are required to show you our disclaimer. And as you're taking a brief moment to look at it, I would also like to invite each and every one of you, if you haven't started following us yet, to follow us on Twitter. This is our handle right there, abbreviation for Specialist Trading. You may want to write that down. It's at SPCLSTTRADG. Every day I post information on Twitter, anywhere from just daily financial wisdom to actual signals that our strategies have generated. In fact, just the other day, I posted a buy signal in the dollar yen for the Forex traders. I also posted that some of our strategies had generated buy signals as well in the S&P, most specifically for the S&P 500. And as you can see, the market went straight up in the last 2 or 3 days. So there's a lot of great free information that our signals generate, and also that we have in terms of learning tools. But it is rather brief. So if you want a more detailed view of what we do, you can go to Facebook. Pros Trader Strategies is my sister site. They promote and market all of my courses and my studies, and so they've created a Facebook page, and there's a lot more detailed information, anywhere from actual study courses to videos of me teaching. You can go there and learn a lot more about what we do and our methodologies. All right, so lots of ways to follow us, lots of ways to learn. As I stated, we are first and foremost an educational company. We're so different than other websites because other websites will simply force feed you signals. They'll force feed you which market to trade, what you should be in, what you should be out of. We don't believe in that. Once again, our goal is to teach you, as you see here, not to trade for you, but to teach you how to trade with the Specialist Edge. This is the same edge that was able to turn my trading around over 38 years ago when I first struggled trading. And this is the same edge will hopefully be able to turn a lot of your trading around. As I said in the very beginning of this presentation, it's my belief, after 38 years, after trading on the floor and seeing hundreds of traders, or literally thousands of traders actually, seeing what they do, it's my opinion that the majority of traders fail is because you're overcomplicating your trading. You're making it far too complicated and difficult than it has to be. For some reason, we've been taught that the more complicated a strategy or method is, the more valid it will be. And what I've learned in nearly 4 decades is the opposite. Actually, the simpler you keep your technique, the simpler your plan is, the more validity and the more odds you have for success. So I'm going to share with you two very simple but powerful techniques today that, once again, you can add on to any strategy or creative strategy based off of these two edges. And hopefully they'll be able to increase your odds for a winning trade. Now, before we begin, since this is going to be a class, we have a rather large crowd here today. I know a lot of the presentations that you attend, you like to ask questions and the educator answers while the presentation is going along. I like to wait till the very end to answer any questions. So if you do happen to see something that doesn't quite make sense to you, you don't understand, please wait till the end and then we'll go over it, okay? Now, many times if you wait till the next slide, your question will be answered. The only question I will answer at this time is the most popular one, and that is this being recorded? And yes, it is. If you have to leave early or if you happen to experience technical difficulties with your computer, you'll get a link to this recording. Just simply request it from Pro Trader Strategies. All right, so once again, if you have any questions, kindly wait till the very end and we'll go over each and every one of them. Why don't we begin? Here is what you are going to learn today, since this is a classroom and we will be teaching you these two edges. First of all, edge number one is specifically designed to get you in sync with the market. Everyone knows you should be in sync, but most traders don't know how to properly be in sync. So I'm going to show you a very simple way in which to do that. And then we'll show you our second edge, which is a price bar pattern that you should really be looking for in any strategy, any system you trade. Doesn't matter if it's based off fundamental news. It wouldn't matter if it's based off a pattern. It wouldn't even matter if it's based off the tides of the ocean. Absolutely makes no difference, but you should be looking for this price bar pattern. So these are the two extremely important edges, and then I'm going to show you how to increase your odds even more with these edges, okay? All right, so let's begin. Edge number one, obviously, you must trade in sync with the trend. As I always state, this is trading 101, right? Everyone knows this. Probably the first thing you were ever taught, the day one of trading. But if this is something that is so basic, so fundamental, why do the majority of traders fail? Why does everyone have a different idea of what the trend is? All right, you go to one presentation and some educator will say, well, the trend is looking at a higher time frame and you must have the lower time frame in sync with the higher time frame. All right, someone might say, no, the trend is looking at specific price bar patterns, higher highs, lower highs, and vice versa. Still, someone else would say, no, the trend is a convoluted indicator that I've come up with, and when this indicator is matching up with something else, then you know exactly what the trend is, okay? They're all valid, and they're all very generic, but they're not very consistent. Let me show you what I mean here. Here's a generic chart that I specifically left off the market and the price bars for, because I just want to show you that it wouldn't matter if this were a 5-minute chart that we're looking at, or it wouldn't matter if it were a monthly chart. It wouldn't matter if it's a currency pair, or it wouldn't even matter if it's a stock. It's all going to be the same. So someone looking at this that has never taken my courses before would say, well, Steve, there's no real trend here. We're basically in a range. We're going lower, then back up, and then lower again. And every class or every book I've ever read always tells me to stay away out of rangy markets, because that's where you have losses. That's where you get whipsawed, okay? This is the way the majority of people think and the way they're usually taught. But that's not true according to specialist trading, because the way we find out what the overall trend is by simply applying a 50-period moving average. And once we apply the 50-period moving average, we ask ourselves, where is price in relation to that 50-period moving average, okay? That is so important. I'm going to repeat it again. You may want to write this down and put it on a post-it on your computer screen, because you should ask yourself this before you pull the trigger. Always ask yourself, where is price in relationship to the 50-period moving average, okay? If price is below, then that means we're in an overall downtrend. But if price is above the way it is right here, well, what does it tell us? It tells us that the overall trend is up. And if the overall trend is up, we're not going to be selling. We're only going to be buyers. So in our opinion, right off the bat, you've already eliminated half of your losses because you are on the right side of the market. You see how simple this is? You see, you don't have to look at some convoluted indicators. You don't have to look at a different time frame. It doesn't matter what the bars or what some guy is saying in a chat room. All you have to do is apply a 50-period moving average. And it doesn't matter if you're looking at a 5-minute chart or a monthly chart. It's always going to be the same. All right? How about this chart? All right, now this is once again a generic chart. Someone looking at this would say, well, Steve, there's no trend here. We're basically going sideways from down back up. I'm going to stay out of this because I want to have some more information to find out what the market's trying to tell me. That's trading 101, but that's why most traders miss a lot of trades, because if you apply the 50-period moving average, you ask yourself, where is price in relation to that 50-period moving average? Price is below. So the overall trend is now down. So there's no reason to sit and wait or want to get further information. We know that the overall trend is down. If the overall trend is down, are we going to be buyers? No, we're only going to be sellers because we want to go in sync with the trend. Remember, that's the first edge. You must trade in sync with the trend. So if price is below the 50-period moving average, the overall trend is down. That's how we are in sync with the trend. We're only going to be sellers. This rule is so simple, but this rule has saved me literally hundreds of thousands of dollars over the years I've traded, perhaps even millions of dollars, because it's got me on the right side of the market. Now, sure, every once in a while there may be a perfect buy that is below the 50 and a perfect sell that is above the 50, but remember, we're talking about consistency here. We're not talking about hitting home runs with every trade. We're talking about having consistency so that you'll be able to trade 20, 30, 40 years down the road. So the only way you'll be able to be consistent in terms of the trend is by applying this 50-period moving average. Once again, once you're in sync with the overall trend, you've already eliminated half of your losses. In fact, go back and look at your last 10, 20 trades. I can almost guarantee that your losses were because you were out of sync with the 50-period moving average. All right, very simple, doesn't cost you any money. There's nothing you have to purchase. You can start applying that right away. Let's go to edge number 2. Now that we know what the overall trend is, we want to look for bars that close either in the top or bottom 25% of their range. Okay, so what does this mean, the top or bottom quarter of their range? Now, it does not matter what type of bar you're looking at as we look at this generic open, high, low, close bar. Most students have difficulty with this because they say, well, Steve, will you mean range from where we opened to where we closed? I don't know how this, for some reason, got to be assumed that that's what the range is. Range means the extreme high of the bar and the extreme low. Okay, that's what range is. For some reason, it's been changed and diluted to mean, a candlestick open to close range. That's not what the range is. So if you're looking at a candlestick bar, it's the high of the wick and the low of the wick. All right, and what you want to do is divide it by 4 separate but equal parts. Divide it by 4, and if you close in that top 1/4% and you are above the 50-period moving average, well, guess what? The market is telling you that's an indication to buy. Once again, you see how simple this is? We're getting all our information from the chart in front of us. We don't have to rely on an outside source telling us what to buy, where's the trend. We've figured it out for ourselves. Remember, we stated our job is to empower you as traders. That's the only way you're going to become consistent. Now, conversely, if we, or I should say, in addition, if we look at that right here at this generic chart we showed you earlier, these are the 3 bars that closed in their top 25%. They happen to be candlesticks, and it's the same concept. From the very top of the wick to the very bottom of the lower wick, you just simply divide by 4, and if you close in the top quarter, those are the bars you want to be looking for. All right, and look at what usually happens. All right, this is a great tool that the market is telling you that most likely this is what will be happening very soon. Now, conversely, we can still do that if we see this type of bar. This is your standard open, high, low, close, but we could just as easily be looking at a candlestick bar. We want to divide by 4 separate but equal parts, and if we close in the bottom quarter right there, number 4, in the bottom 25%, and we are below the 50-period moving average, well, the market is telling us, not some guy in a chat room, not some TV guru telling you what the market should be doing, but the market itself is telling you we're most likely going to be heading lower very soon. So if we look at that chart, once again, that generic chart, we see here that this is a bar that closed in its bottom 25%, and look what happened after that. You see, the market is always trying to give us signals. It's always giving us edges. But for some reason, we've been taught that we have to look at this indicator, we have to look at this, we have to listen to this guy, he's a guru, he knows everything, or we have to make it as complicated as possible. It doesn't have to be. If that were true, then everyone would be a millionaire by this point. It doesn't work that way. Mostly, The people that are successful, the people that have been trading 30, 40, 50 years, follow very, very simple rules. Now, these are two of the rules that make up one of our most consistent strategies. Strategy number 4. I've just given you actually 2 of the 5 rules that make up this strategy. So you have roughly 40% of the rules. This by far is our most popular and consistent strategy today. All right, and it's the beauty of it is that it transfers over onto any market and time frame. In fact, let me share with you some of the highlights of this strategy. It's for virtually all traders, from beginners to advanced. We have people trading this who just started trading last week. We also have people trading this who are hedge fund managers who've been trading for over 30 or 40 years. Everyone gets the same format. Now, when I learned this over 30 years ago, this strategy on the floor, it was specifically designed for traders looking to catch quick momentum moves because that was our environment. When I traded on the floor, we were sometimes in and out of trades in a matter of minutes. But now that we are, most people are not trading on the floor these days, we know how to extend those gains, and we teach you how to do that in the course. So if you want to be in and out and use it for very quick trades, you can. But you can also use this almost as a swing trade. Right? Now, its intensity level from 1 to 3, if 1 were the most intense of all strategies where you basically could not walk away from your computer, and 3 was the most relaxed, where you could just enter an order and walk away. It's right in the middle. It's a number 2, very moderate strategy to follow. It only uses 1 indicator. That's how simple it is. And guess what? I already gave it to you. It's the 50-period moving average. Everything else is we look for a pattern. It only has 5 rules. I've just given you 2 of them. All right, so you have 40% of this strategy already. Now, the beauty of this strategy is it can be transferred onto any market, any time frame, and any direction. So just think of that. You don't have to buy and be upsold another strategy in order to trade the Forex markets if you want to trade Forex and you want to trade stocks. It's the same strategy. See, remember, keep things simple. You only have to overcomplicate things when the strategy really is not that valid. But when it's very simple and basic, it's valid. It works in any market or time frame. All right. Now, if you become a member of the Strategy 4 course, you're going to automatically receive automatic buy and sell indications. I'll show you what those look like in just a moment. But remember, we are not about that. We're not about simply force feeding you signals. We don't really believe in that. So we only provide you with these for educational purposes, meaning that we want you to know what to look for. So if you've studied the manual, if you've gone over the course materials, if you've been, been consulting with me on what to look for, and you feel you understand the process, you start looking at when these are generated automatically, so that you can see if you're, validly identifying signal setups. But once you do, most of our students then quit looking at these automatic buy and sell signals, and just they know what to look for automatically. They see them all over the place. Now, I'm not going to sit here and tell you that every Strategy 4 signal works perfectly. There are going to be losers from time to time, small losses, and I'm even going to show you some in just a few moments here, some of our examples. But the beauty of this strategy is that oftentimes it will have a loss, and then 1 or 2 trades later, it will have a winner that will oftentimes make up the loss entirely and even be a higher gain. So it's about consistency. That's what I stated earlier. We don't, in any way, propose to tell you that you're going to be making extra income with all of our strategies so that you'll be able to buy that new house you've been wanting or go on that dream vacation. Everything depends on how much effort you put into studying the research, because you're going to make your own decisions. What we are instilling in all our clients and members is consistency. All right. So whether you trade a small $3,000 account or a large $300,000 account, we're trying to instill consistency so that you can be trading 10, 20, 30, 40 years down the road. That really is, in my opinion, the true meaning of success. I often tell my students, when I worked on the floor, I was in a trading room with close to 300 other traders. And I saw sometimes on a daily basis, I saw traders make really big home run trades time after time. Some of them were just for hundreds of thousands of dollars. Others became millionaires almost overnight. And guess what? Almost all of them gave it all back. In fact, out of all the traders I traded with, I think there's only 2 or 3 left that are still trading, myself included. So it does not matter if you learn some get-rich-quick system, because if it gives it all back, what good is it? What you really should be focusing on is learning techniques and education that will sustain you. 2 steps forward, 1 step back, so that you'll be able to trade 20, 30, 40 years down the road. That is the real meaning of success, okay? And that's what we're trying to instill with specialist trading, consistency, because consistency equals longevity. All right, so let's show you some the actual strategy number 4 setups. Here's one in MSI. This is an older chart, but let's look at edge number 1. We originally were below the 50, then we crossed above it. So from this point on, the overall trend is up. Are we going to short anything? No, we're only going to be looking to go long. Now we have a bar here that closes in its top 25%, so there's edge number 2 that has been met. And then the remaining 3 requirements of the strategy, which I'm sorry I can't divulge at this time, are all met. So the automatic add-on, the software generates a buy signal. Okay, so that's our buy signal right there, and look what happened to the stock. The stock basically went up from 59 all the way up to 68 in the next 2 or 3 weeks. Here's another example in WYN, WYN. We ask ourselves, where is price in relation to the 50? Price is below. So are we going to try and buy anything? Are we going to look for buy signals? Are we going to listen to some guy in the chat room tell us to buy WYN? No. In fact, we're only going to listen to someone if they tell us to sell WYN. But we don't have to listen to anyone anyway because we already have all the information. Remember, we're about making our own decisions. So we see here that this bar closes in its bottom 25% and it meets all the other requirements of the strategy. So the software generates a sell signal. And as you can see, stock quickly went much lower from 78 all the way down to 70 in the next couple of weeks. Remember, this is the market giving you the signals, nothing else. We don't listen to news. We don't look at what's going on in fundamental conditions or worldly news. We don't look at tons of indicators. We don't listen to guys in chat rooms or trade rooms. We only listen to one thing, the market or the chart in front of us. Now, as I stated, we are all about consistency. Consistency means 2 steps forward, 1 step back. So what is that 1 step back? That 1 step back means that every once in a while you will suffer some minor losses. Here's an example here in Tesla. We are below the 50-period moving average. Here is a bar where we close in the bottom 25% of its range, and it meets all of the other rules of the strategy. As you can see here, here's another bar, but it did not meet the rules, so there was no sell signal. But this one did, so the software generates a sell indication for you, and look what happened. Didn't work out. So from time to time, you will have these small minor losses. So we have to ask ourselves, how do we increase our odds for success? Because there is a way to increase our odds even more. And this is by adding another tool. We add the PET-D. This was another proprietary tool I was introduced to on the floor. And what we've done is we've color-coded it to a color bar algorithm. When you have a series of green bars, it's telling you now that the short-term trend, not the overall trend, but the really finely tuned short-term trend is up. And if we have a series of red bars, it's telling us that the really fine-tuned short-term trend is down. So how are we going to use this with strategy number 4? Here are the rules now. If strategy 4 generates a buy signal, and you've just already gotten 2 of the rules of the strategy number 4 signals, well then the PET-D must color it green. All right. Conversely, if strategy 4 generates a sell signal, we're not going to take it unless the PET-D colors it red. So let's look at some stock examples on how we add these 2 extra edges to increase our odds for success. Here's a example in Oracle going back. This was just about 3 weeks ago. We're oscillating above and below the 50-period moving average, but now we have a really large spike above the 50, and we close in the top 25%. So the software automatically generates a buy signal for strategy number 4. This was on the 22nd of October, just about 3 weeks ago. But remember, we want to increase our odds for success. So once we have the PET-D, we only want to take this if the bar is colored green. So we add the PET-D, and guess what? It is green. Now the 3 previous bars before that were red, but the buy signal was colored green. So this will give you the confidence to actually take the trade. Where a lot of people would say, well, you know, maybe I had one loss before. I'm kind of scared to pull the trigger on this one. Well, now that you have the PET-D, now you have the confidence to take it, and look what happened. The stock gained 7% roughly in just 2 weeks, and all the bars remained green going all the way up. All right, let's look at something that happened just last week or a week and a half ago. This was in IBM. Edge number one, we ask ourselves, where is price in relation to the 50? Price is below, so we're only going to be sellers. We closed in the bottom 25% on the 4th of November, and the software generated a sell signal. So we now know that we're going to be going short, but what if we want to have a little bit more confidence in this trade? How do we know we didn't bottom out right here and we're going to be going higher? After all, we have been going higher for the last week. Well, we add the pet D. And once we add the pet D, we see that the bar is colored red. So we see that the bar is colored red. So guess what? That gives us the confidence to actually take the trade. So if we take the trade, 10 points in the next week. All right? All because the pet D gave us the confidence to take the trade. Let's look at PEP, Pepsi. Now there are two signals generated, one on the 15th of October, another one on the 3rd of November. Okay? So as we see here, this one actually worked out. This one worked out very nicely. If we added the pet D, we see that probably the main reason it worked out is because it was green. In fact, we were green even below the 50 period. So this entire time we were below the 50 period. The overall trend was saying, don't buy. But the short-term trend was already telling us we're most likely going to be going higher. You see the beauty of the pet D. It's a very finely tuned tool to tell us the short-term trend. So you could have had the confidence to take this on the 15th of October, but now another signal was generated. And so let's say you want to jump in and say, hey, boy, I just made 4 points on that last trade. I want to jump in and buy again. But remember, in order to buy, we need to see this bar green. And what is it? It is red. So we don't want to take this trade. Why? Because it's not in sync with the overall trend or the short-term trend, and look what happens. Okay? Let's go to FOSL. As we see here, we have a number of sell signals that were generated using strategy number 4. Each one of these worked out very well. They're working out very well on a little short term, but remember, the strategy was designed to keep us in the trade for a very short-term time. So you could have taken each one of these signals and had a real quick short-term trade. But had you wanted to stay in longer, well, you simply see that the pet D colored them all red, and it would have given you the confidence to stay in the trade longer. And ultimately, when we gapped down here, which was just last week, you could have had a 27-point gain in your favor just off this very first signal. How about the E-mini S&P? All right, let's go to the E-mini S&P. So remember, the same exact thing will happen regardless of what market we're in, regardless of what time frame. If we see here, we are oscillating above and below the 50-period moving average. Now, this is an older example, and I specifically want to show you this just to make sure that you see how powerful these techniques are and the consistency behind it. As you notice here, we are originally generating a buy signal. And this didn't work out very well. If we would have applied the pet D, we see that it was confirmed. So once again, we're not promising you the world. Sometimes it doesn't work out the way we would want it to. But as you can see, this did not work out for the best, and most likely would have been stopped out. But the beauty of strategy 4 along with the pet D is that many times the very next signal will be generated, and this was a sell, and now we're red here, and look what happened. 230 points in 3 days. So the resiliency behind strategy number 4 is oftentimes it will make back what it originally had lost. If we look here on the 60-minute chart, E-mini, same thing again. We have a buy signal, and it really didn't go anywhere. We most likely would have been stopped out with a loss, but then we have 3 sell signals, okay? Could the pet D have helped us here? Well, if we simply apply the pet D, the buy signal should have been colored green. It was colored red. So we would have bypassed this, and we would not have had a losing trade. But as you can see here, the remaining 3 signals were all colored red, and that's 50 points in our favor to the downside in just about 3 or 4 days. That's $2,500 per contract. So you see how the pet D is helping us with all these different markets and all these different time frames. And let's go to the Forex markets right now, okay? Because the same concept will be equally as valid in any market or time frame. Here's a weekly chart of the Canadian dollar. Totally different time frame. Weekly chart going back to May of this year, 2 buy signals were generated. All right, which one should we have taken? The first one actually went lower, and we may have been stopped out depending on how much risk we wanted. And how about the second one? Well, looking back in hindsight, if we had added the pet D, Buy signals should be colored green. Well, this first one was never colored green. It was colored red, so we would have not taken it. We would have only taken this one, and look what happened. 1,100 pips in the next 5 or 6 months. That's roughly about $11,000 per contract. And don't worry, if you miss that one, there's usually more being generated, as this one was just a few weeks ago. Now that's a weekly chart. What if we want to even go to a monthly chart? Well, here's a monthly chart of the Australian dollar. Okay, as we see here, we are below the 50-period moving average, and a sell signal has been generated. So the two requirements we share with you today are being met, closing in the bottom 25% of the range and below the 50. So those are the same edges I shared with you, even if we're looking at a 5-minute chart or a weekly chart. But how do we get that extra bonus of confidence if we want to actually trade the Australian dollar on a monthly time frame? Well, we just add the PET D. And as you can see here, the PET D gave us the confidence because sells need to be colored red. And look what happened. Coming all the way down into October, actually, we've gone down 2,300 pips, so that's $23,000 per contract. Now, we're not saying you would have held it that entire time, but that's how much room you had to move in your favor after a signal was generated. All right, so let's recap before we go into questions and answers. And here's what you'll learn today. Edge number one, you should always trade in sync. Everyone knows this, but if everyone knows this, why do most traders struggle with this concept? It's because they're given a faulty or non-valid definition of what the trend is. I can't tell you how many traders tell me, well, Steve, I have to have 2 time frames in sync with each other, in line. That's the only way I know what the trend is. So if I'm trading a 5-minute chart, my 60-minute chart has to be in sync. Or if I'm trading a 60, my daily chart has to be in sync. Listen, if you want to trade that way, that's fine. That is in no way a requirement of anything we teach at Specialist Trading. In fact, I have never found any consistency in making sure that 2 time frames are in sync. The only thing that's done for me is keep me out of a lot of good trades. The easiest thing to do is just apply a 50-period moving average. You don't have to look at another time frame. And if price is above, the overall trend is up. If price is below, the overall trend is down. Now, if price is above, you're only going to be a buyer. If price is below, you'll only be a seller. Secondly, the price bar pattern. We want to see a bar close either in the top 25% of its range if we're above the 50, or the bottom 25% if you're below the 50. Why? Because that's the market you're looking at. That's the market you're trading, giving you a tremendous edge. In fact, it's almost screaming out that most likely I'm going to continue in that direction. Okay? Remember, it's not somebody on TV, it's not somebody in a chat room, it's the market telling you I'm most likely am going to go in that same direction. So you put these two edges together and you see how simple they are, but how powerful they are, and they made up one of our best strategies in terms of consistency, strategy number 4. But we did show you how sometimes you will get a minor loss in strategy number 4. So how do we increase our odds for success? We add the PET D, which is a proprietary algorithm I was introduced to on the floor that we've turned into a color bar algorithm. So now you have the ability to put these two together. They're going to increase your odds for success. And we've had such a outpouring of testimonials telling us that once they applied these two, they for the first time are able to become consistent traders in maybe 5, 10, 20 years of trading. That's why we call these two, when put together, our dynamic duo. So here's what we're offering you today for attending the presentation, taking time out of your Wednesday to come see us speak. We're giving you a great discount and a great package of the Dynamic Duo. That's strategy number 4 along with the PET D tool. You're going to get instant course access, detailed instruction. You're also going to learn all the entries, exits, and stop placement rules for strategy number 4. You're going to receive signal alerts. As well, you're going to get the PET D, which includes the add-on that will color the bar green or red. And you're going to get 4 specific trading techniques that are entirely different but able to use on the PET D. And lastly, you're going to get lifetime correspondence with me. All right, you'll be able to contact me whenever you'd like. It doesn't matter if it's next week or 2 years from now. You're going to be a student of mine for life. Okay, this is our Dynamic Duo special. Now, let me just show you what happened yesterday, because I know a lot of people say, well, Steve, we go to these presentations and sometimes guys show us stuff that happened like 6 months ago. And I agree with you. That's not something that would make you feel that confident in the method. So let me show you how well the Dynamic Duo worked yesterday. This is if you were trading the E-mini futures. here's a 5-minute chart of the E-mini S&P. As you can see in the bottom left-hand corner, this is on the 17th right here, coming into the 18th, which is today. Now, on a 5-minute time frame, the first portion of the day we were above the 50, and the second portion of the day we went below the 50. So naturally, the first portion we'd be buyers, the second we would be sellers. It's that simple because that's the first edge I taught you. And then once we use the add-on, which is the strategy number 4 indicator, look at all these sell signals and buy signals that were generated. A total of 5 signals were generated yesterday. We had a buy signal here in the first half hour of the day. Look at the nice movement you had. You had another one here, and then this last one, which may not would have worked out. So let's just say, for all intents and purposes, you broke even on this one. All right. As we moved over to the second portion of the day, we started to sell off. So we had 2 nice sell signals generated, and each one of these would have been profitable. Now, looking at these, this is just strategy number 4, but how would we have the confidence to take these trades? Well, we just want to see if they're verified. We add the PET D. And now all the buys were all colored green, so they gave you the confidence to take them, and all the sell signals were colored red, which gave you the confidence to take them. That's the beauty of our dynamic duo. You have this extra feeling of confidence and assuredness that you know that you're on the right side with the methodology, and you're on the short-term right side using the PET D. That's why we call it the dynamic duo. Now, another added bonus with this dynamic duo package is that the PET D by itself is a great tool, not only for the short term, but for the long term. Here's a monthly chart of the S&P going back 20 years ago. As we see here in the lower left-hand corner, that's 1995. You see all the peaks and valleys when we went up here in 2000 and the dot-com bubble burst, and we had the crash after that, and then we stabled up again, and then we got up to the banking and financial crisis and how we fell out of bed there, and how we've been going up ever since. You know, if you're a long-term investor, someone has a, IRA portfolio, wouldn't you have liked to know when those crashes were going to occur, and when you could have stayed out of the market then gotten back in, and when perhaps we're going back into another sell-off or bear market to get out? Well, yeah, it's easy with the PET D. All you have to do is add the PET D. And as you see here, the PET D can also identify long-term trends. So what the rule of thumb is when you see a series of 3 consecutive bars of a different color, that's your signal to exit. So as we were going up, all the bars were green. Once in 2000, here we had a series of 3 red bars. That was your exit point, and you would have bypassed the entire dot-com crash. Once you had 3 green bars, you're back in long-term from 2003 all the way to 2007 for the next 4 or 5 years, and you would have exited right here when you had 3 red bars, and you would have missed all of this banking crisis crash. And then in 2009, when we had 3 more green bars, you would be in the market and holding all the way up until now. Now, wouldn't you like to know when you have 3 more red bars? That's how simple it is with the PET D. So it not only will work for intraday trading or for swing trading or daily bar trading, it also can be applied to longer term trends as well. So once again, this is what we're offering you today. The PET D, along with strategy number 4, instant course access, all the rules, signal alerts, add-ons for the color bar changes, as well as the up and down arrows, as well as lifetime correspondence. Okay, now we're discounting it tremendously, almost 25%, because the full price of these 2 is usually runs around $3,200. We're dropping it roughly around 25% down to $24.95, but we're also offering payment plans. So we realize if you can't come up with that sum, you can put together a small deposit and be up and running in just moments with a small payment plan. Okay, so here's how to do that. Contact the people at Pro Trader Strategies, my sister site. Here's their email, trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. If you want to put together a payment plan, call them up and they'll have you put a small deposit, and you can get all the information as soon as today. Okay. Now, if you'd like to just sign up right off the bat and take advantage of that nearly 25% discount, there is the link at the very bottom, as you see there. But that's not a live link. You'll simply have to copy and paste that onto your browser. So just copy and paste that, and it will automatically take you there. Now, I'm going to leave all this information up here for you. And if you want to go to a live link, you can just go to your chat box on the far right. They've posted a live link there under the chat box, and you can click that on. And that's for the PET D Dynamic Duo, and you'll be able to go right to the sign-up page. Now, I'm going to answer your questions right now while I leave this screen up here so that you can either get their phone number or contact them through an email or just go right to the link. And I want to thank you for holding off on any questions. Let's see, Lee asks, why weren't some of the trades before 11.350 taken? You're asking in PEP. I'm sorry, Lee. I'll have to go back and look at that chart. I don't want to look but right now because this is a static presentation and I'll have to be going back 20 or 30 slides. I don't know where that is. All I can say is that either all of the rules were not met, Lee, for that to be a very a valid setup, or else we weren't. There's a specific entry point sometime that you need. These levels need to be met in order to enter, and perhaps they weren't met as well. Okay. Timothy asks, can the PET-D indicator run in Metastock and TradeStation? Yes, Timothy, very good question. It runs on both of those very well. In fact, we have tons of members and students who use both TradeStation and or Metastock. In fact, let me give you the list for all of those who are probably wondering the same thing, what the charting software packages it is applicable to. Obviously, Metastock and TradeStation, NinjaTrader, as well as MT4. Okay, it works perfectly on those platforms. You can also apply it to Thinkorswim, and the only difference there would be you have to change a few things. We would currently have to make sure that you use the data that you use for your Thinkorswim and then transfer it over to a separate NinjaTrader platform that we furnish you for free. And then it would run on NinjaTrader. So you could be looking at Thinkorswim and NinjaTrader at the same time, except on your NinjaTrader platform, you would have the PET-D and strategy number 4. Now, don't worry, we have a great tech support department that will help set you up with this for free, and they'll take care of it, all of it for you. So there's nothing you really have to do other than contact us, and we'll have it all set up for you, okay? And by the way, we're currently allowing members to run it on 2 platforms. So if you do have 2 platforms, you can run both these methodologies on 2 platforms, okay? Linus asks, what are the basics for the exits in these examples without using the PET-D? Well, Linus, we have a full course on the exits, and everything is included. But remember, once again, I already gave you 2 of the rules. That's one of the rules for exiting. I can't give you all of that because basically it wouldn't be fair to the people that spent close to $3,200. So not only are we discounting that roughly 25%, but we're throwing the PET-D in there as well and giving you all the rules. So if you really want to take advantage of all my information I've accumulated in nearly 40 years with exits, entries, stop placements, money management, all the different things to heighten your levels of consistency, I really strongly urge you to take advantage of this. It's a great end of the year package, and by far, I mean, the reason why we call it our dynamic duo is because we've just gotten so many testimonials from traders, many who just started trading for the very first time in their life, who said that it's really helped them tremendously to understand how to trade the markets, okay? See any questions? Let's see. Closes in the bottom 25% since you did not mention it. I'm assuming that the color of the bar does not count, but probably would not hurt. I'm not sure what you're asking, Lee, but basically, remember, when you close in the top 25%, that's a great signal coming from the market that you're most likely going to be going higher or you're going to continue. But you want to confirm that with the PET-D. So the PET-D must color that same signal bar green. That's the dynamic duo. Now, obviously, if you only had strategy 4, you're still going to have a level of consistency, but we found that it's increased much higher with the application of the PET-D as well. Okay, I hope that's what you're asking. Any more questions? One thing I want to mention, since we are coming to the close of the year, I know a lot of people, I've stated this before in my other presentations, everyone, myself included, I used to do this all the time. I would start out at the beginning of the year, say like, well, this is where I want to be at the end of the year. I want to be making so much money, so much money a day, so much money a week, so much money a month, and then by the end of the year, I'll have so much money. Then I can buy that dream car, or I can go on that dream vacation, or I can do that extra addition onto my house. And I would almost venture to say that the majority of you probably say the same thing to yourself. And I could almost guarantee that 99.9% of the traders out there have not met any of those goals. That's usually the way it is. Once again, it's my opinion, after I've learned almost 4 decades of trading, it's because We don't empower ourselves with the information we need. We think that someone is going to tell us the perfect time frame. We think that someone is going to give us the perfect system, or someone's going to tell us the perfect market to trade. And what we're really doing is taking ourselves out of the game. It's basically saying, I don't know what to do, you tell me what to do. And there is no way you're going to be consistent if you go by that concept. The only way to become consistent is to empower yourself by making your own decisions. Sure, you still need the tools and the information to do that, but you have to take that step to say, I'm going to make my own decisions. I'm going to trade for myself. I'm not going to rely on some guy in a chat room. I'm not going to rely on some system I bought where I don't understand it, but I just take the signals blindly. You're going to understand the entire process. You're going to understand exactly what you're doing, why you're doing it, why you're trading it a certain way, why you're using this exit as opposed to another, why you're applying this entry as opposed to another. And the way to do that is to be getting the sound fundamental information that has stood the test of time, not some fly-by-night system that promises the world. And this is the same thing. These are the same things that turned my trading around. When I first struggled, my first year or two as a trader, I struggled tremendously. So I know what it's like. I know what many of you may be going through. In fact, I thought I was going to be fired as a trader on the floor because I couldn't make a dime. My mentors were lucky enough to take me aside and teach me the same things that I teach my students. And only because of that mentoring was I able to be trading nearly 40 years now. So this is what I want to do to all of you. If you're really interested in taking your trading to the next level, if you want to be a consistent trader, if you want to be someone trading for the next 20, 30, 40 years, take advantage of this great offer we have. Remember, the prices are extremely discounted. There is talk that we may be increasing the price of the Pet D next year, in which case they won't be anywhere near the price we're offering you today. The beauty of this at the same time is that these are yours for life. You have these, okay? So if you're interested in learning from someone who has nearly 40 years experience, who teaches strategies, not systems, then come on board and take advantage, and we'll answer any question you may have, and I'll be trading right there alongside of you, okay? In conclusion, I want to thank you all for attending, and I wish you the best of luck trading, but most of all, I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I hope to see you next time. Bye-bye.